Hi, this is Lucy Guzman from Lucy's Tax Service. This video will be I will be speaking about my top tax strategies that I have. They're some of my favorites, which there can be so many tax strategies, but these are the ones that I like and I encourage my clients to do. So disclosure, please note that this is for information purposes only. Everyone's financial situation is different. And with that being said, take the information as a suggestion and do your own due diligence. Okay. So I'm going to start. So no matter what your age or income level, you can apply some of these strategies, some or all of them. So my number one is go to college or go back to college, either yourself or you send your children to college. And you can deduct your the American Opportunity Credit, and some of it is refundable. So it's a credit up to $2,500 for continuing education, and some of it is refundable for the first 4 years of college. After that, you can deduct a lifetime learning credit, and this is for you can deduct your college tuition, books, and fees associated with the higher education. That's my number one. So if you want to continue your education, go for it. You can start a business, something that you love doing or you thought of doing. Simplest form of a business, form of business is sole proprietor. You register your name at the courthouse. You get a website, get business cards, get your EIN number, open up a bank account, advertise, and you're in business. You can deduct all of the expenses pertaining to the business, startup expenses. Usually the first 3 years, the IRS understands that most businesses don't start earning money till later on, after the first 3 years. So they won't cause a red flag immediately if you keep generating losses, then it will cause a red flag, because why are you in business? So you're in the business to make money, and while you're making money, you're enjoying something that you like to do. And you get to deduct some of the things that help you to make money and run your business. So that's another tax strategy that I like. And some people like to have, like to do their business on the side. So this is you can keep your regular job and have a business on the side. And you can deduct cell phone. You can deduct your business expenses, office supplies, a lot of things. Office in the home. If you work from home. I have a list of items you can deduct, and they will be linked to the bottom of the video. And also I'll have a list, and you can print the list out, and there'll be a link on there too. Another thing is, if your business is making money and you're doing really good, you can buy assets for your business, assets that will help your business grow, and you can deduct them at Section 179 deduction. So almost the entire cost of the asset you can deduct. You can buy vehicles if you're in a delivery service business. You can deduct the entire vehicle, Section 179. So buy assets for your business. Also, if you're in the business if you're a real estate agent, real estate investor, you can buy a property, flip it, you can rent it, or you can buy another property. So those things you can also do. That would be another business strategy, is to buy assets for your business. Regarding whenever let's say you're a real estate investor, real estate investing is a little bit more trickier, because some people, let's say they buy an asset and they hold on to it for a whole year. They don't sell it till maybe 2 years. You can deduct some of the operating costs of the asset, not the entire cost of the asset. The asset is deductible when you actually sell it, but as you're keeping the property on your books, you have utility bills to deduct. You can deduct the cleaning. You can deduct some of the repairs, the upkeep of the property can be deducted, because you're holding on to the asset and it's an expense. You can expense it on the book. just be careful not to double dip your expenses. So if you picked it up in the current taxable year and you sold it the next year, just don't pick up those expenses again. And that's why having a good accounting books will be really helpful in those situations. Also, when you buy and sell assets such as a home, you can do the like kind exchange, and you don't pay. So let's say you bought and sold the house and you use the same proceeds to buy another house, then you will have no gain because you use the same proceeds. So it's a like kind exchange. You won't have any taxable consequences because you use the same funds to buy another home. So that's a like kind exchange. So that's another tax strategy that you can use, is just keep buying and buying and buying until you actually decide to buy and cash out. Then the proceeds will be taxable to you. Okay. So you can also start an IRA or put money away into your IRA. IRAs are designed for retirement. You can't withdraw them. You can't take them out until you retire. So just be careful with that one. But if you have a job and they have a 401k, I strongly suggest that you try to put as much money as you can into your 401k, because mostly all employers match what you put in. So they'll match it, and that's an increase in your salary. So that's also a good strategy to have. If you're self-employed, you can open up an IRA. There's different forms of retirement accounts that you can open up that will allow you to use some of that money to, if you're, again, an investor, you can maybe use some of that money to buy assets for your business. And then, you replenish it. But you can talk to a financial investment advisor about that. I'm just saying that these are some of the things that can be deducted on your tax return: 401ks, IRAs. You can have a baby. Having a baby, you're growing your family. I'm not saying that it's a very important decision to make. Number one, because you have to care for your lovely child for all their life. I myself, I'm a parent. I have 2 children and I love my children. But having a child does provide you with a lot of tax benefits because you have the child tax credit. This year is $3,000 per child under 17 and $3,600 per child under 6 years old. So you have those credits. You also have the earned income credit, but those are designed for a certain. So if you make over a certain type of income, it gets capped out. So. But the child tax credit is mostly everyone is entitled to that one. If you are a really high income earner, you may be phased out, but it'll still be some of it there. Also, if you can, stay single for as long as you can, and because when you filing single does have the highest tax rate, but it also doesn't have the, like, let's say you get married and then you have to combine both incomes. So then you have your income and your spouse's income. That's double the income. You get into a higher tax bracket than when you were single. Okay, so if you can, stay single for as long as you can. Then when you get married, you understand that you will have to combine both incomes. But if one spouse doesn't work, then you'll be okay. But if both work, you combine the incomes, you get into a higher tax bracket. Just something for you to note. If you can hold off on marriage, hold off on marriage. So that's another thing. Here's buying an electric vehicle and energy efficient improvements to your home. Those are also allow you credits on your tax return. The credits are case by case basis. Not everyone, if you don't have a tax on your tax return, you may not even get any benefits from these credits. But if you are a high earner and you need a car for your child, try to buy an electric vehicle energy. And if you're trying to do improvements to your home, try to find energy efficient improvements that you can deduct on your taxes. Okay. Also, I have a bonus strategy is when you sell stocks, try to hold on to them long term, because long term will give you a lower tax bracket on your investments, on your stocks that you are investing on. So if you're investing in stocks, try to hold on to them long term, or anything for that matter. Long term will give you a lower tax rate. So hold on to a if you bought a home that you're going to flip, hold on to it long term. It'll give you, or maybe hold on to it for a year, it'll give you a lower tax bracket. Okay, and those were my top strategies, and I have a list that you can download or print out the list if you like, or watch the video again, and you can do more research on these strategies yourself. Thank you. Bye.